course, we are looking at. So there you have the net profit for State Bank of India. Like I said earlier, had come at 14,330 crore rupees, mostly in line, if not slightly above what the CNBC-TV18 poll had thrown up. You also have the net interest income coming in at 39,500 crores versus a poll of 39,021 crore rupees. So not much of a surprise there. The profits are up 8% year on year. If you look at the figures, about 14,330 crores. And if you look at the asset quality of State Bank of India, let's have that, up as well, to see how that has done. If we could ask our producers to pull up the gross and net NPA numbers for State Bank of India, which are also very closely tracked. We're still going through the fine print to get you more details. On your screen, of course, right now you have the net profit numbers. All right. Okay. We do have our analysts standing by, to take us through the fine print. Abhishek, if you're with us, what did you make of the second quarter numbers that have been reported by State Bank of India? Okay, we have Kaitav Shah actually joining in, who is the head of BFSI at Anand, Rathi Institutional Equities, who's with us. Kaitav, thanks very much for your time here on CNBC TV18. Let me start with State Bank of India. What did you make of the numbers? Of course, we're still awaiting more details, but the profit is a beat. The net interest income is also above what the street was working with. Kaitav?
Yes, the numbers broadly seem to be in line with what has been the expectation. We just have to look at what kind of growth SBI did. I think they generally deliver in line with what the credit growth for the system has been. NII growth at 39,500 is very much in line with our expectation. We'll just await what's happening at the pre-provisioning operating profit level to get a better view on or a sense on what the numbers have been. We were any which ways expecting a benign asset quality for this quarter.
Okay, so I have the gross NPA number for State Bank of India, and that has come in at 2.55% in the second quarter, and that compares with 2.76% in the previous quarter. So a bit of an improvement on the gross NPA front. The net NPA for State Bank of India has come in at 0.64%. This compares with 0.71% in the previous quarter. So an improvement as far as, the gross and net NPA ratios are concerned. Of course, we still have to see what the slippage figure is, and that we'll get later when the more detailed press release comes. But Kaitav, what is the NPA figure that you were working with? Is this in line with what you were, expecting?
At first cut, it seems to be better than what we were expecting at both the gross NPA and net NPA level. We'll just await whether there has been any large write-off or not.
Expecting, anything large in terms of a write-off from SBI in this quarter on account of any specific companies or, accounts?
No, not for this quarter. As I mentioned, we were expecting a benign asset quality this time around.
Okay, we also have with us Prakash, Diwan, market expert, who is joining in to help us analyze these SBI numbers. Hi Prakash, I don't know if you saw the SBI numbers, the profit at 14,330 crore rupees, net interest income at 39,500 crore rupees, both above our poll. The gross NPA has come down to 2.55% compared to 2.6% in the previous quarter, and the net NPA at 0.64% compared to 0.71% in the previous quarter. Prakash, your first take on State Bank of India's second quarter numbers.
So I think the numbers are much better than anticipated. There was this very clear expectation that revenue would be soft. Even the profits were expected to be just marginally better, especially on a QOQ basis. It would have been very different. But the whole thing is to compare bank numbers on a YoY basis. It's fair, given the nature of how cyclical some of these quarters can be. And, the worry that the street had on the NPA front as well, because last time around there was some slippages that came up in some of the agri and the SME books, which seems to have stemmed definitely given the fact that 2.55 is the gross NPA. We were expecting it to be closer to about 2.8, 2.85. So that's really been a little bit of a relief. But I think overall the numbers are far better than expected. The contraction in NIMs, which was likely, hasn't happened given the spreads getting under pressure. So I think it's kind of getting away with a far better set than earlier.
Okay, so this is better than what you were expecting. But Prakash, quickly, what would you be watching out for in the commentary? Of course, unsecured retail personal loans has been something that that has been highlighted by many banks as a potential area that they will watch out for. The stress is not starting to rise yet, but that's an area they will watch out for. From SBI, what specifically would you want to hear, even on the margins?
So I think that's right. If the asset quality continues to be moderately better or benign, I think then it's time for them to look at where is the growth going to come from, because they can't compromise on quality to chase growth. The pressure on SBI to chase growth is going to be immense, given the fact that a lot of the other large private sector banks have done so well. So I would definitely want to hear from the management as part of the commentary in terms of which segments they expect to contribute going forward in this thing. I'm not so worried about asset quality now, because I think they've figured out, and it's more cyclical. First quarter typically tends to see some of all that happen. Yeah. But as we go along, that could not probably be as bad.
Okay, let's also again look at the Bank of Baroda.
So, from SBI, as I said, it's going to be how does the management perceive the challenge of expansion of names and the book itself without really getting into an area where they have to start explaining quality issues. And for that, what is it that they have in terms of, so they'll also probably set out a roadmap for given the capital adequacy requirements going forward in terms of if there is any fundraise, because some of the larger banks have already started doing that, putting out a calendar in anticipation of cost of funds being probably now peaking out. So that's what I'd like to hear. But the BOB case, of course, there's so much of confusion around not just the Go First case, but even the other issues they had, whether that's going to impact their ability to match up with growth that, let's say, Canara Bank is clocking, or even some of the smaller banks like Bank of India. I'm talking about the PSU set, because PNB, SBI have been fairly ahead in terms of most of these other mid-sized banks, but BOB had a fair chance to kind of play leader out there, but they seem to be, the quality is something which has been very, very volatile in terms of, if you see, they've done well 2 quarters, the last 2 quarters, they've again started slipping. So that's where you need to understand what is it that's going wrong. And maybe, I think there's the question on some of the growth that came in from co-lending and all of that will also need to be re-looked at.
Yeah. Okay, thanks very much for that, Prakash. We do have Kaitav back with us.